Imagine this. Your auditor walks in and asks a very simple question. Your balance sheet shows sundry creditors of 33 lakhs. Can you tell me, supplier by supplier, who exactly you owe this money to and how old is each amount? If you can answer that question confidently, you already understand today's topic. If you cannot, don't worry. In the next 9 minutes, you will. Hello everyone, welcome back. Today we are learning one of the most important concepts in any ERP: Oracle Fusion, SAP, even Tally at a smaller scale. The difference between the subledger and the general ledger. If you are an accountant, a senior accountant, or a finance professional planning to move into ERP, this one concept will come up in every interview and every implementation. So stay till the end and let's begin. Oracle Fusion is not one single system. Think of it as a city with three districts: supply chain, human capital, and financials. And today's question is, out of all these modules, who actually writes the accounting? Start with supply chain. Purchasing raises purchase orders, order management takes sales orders, very busy modules. But remember this: a purchase order is only a promise, no debit, no credit. Most of SEM records operations, not accounting, except when goods physically move. The moment material arrives and you make a GRN, a goods receipt, value enters the books. And cost management handles inventory valuation, issues, and cost of goods sold. These modules carry the lightning bolt. They create real accounting entries. Next district, HCM, the world of people. Hiring, attendance, leave, rich data but zero journals. Until payroll runs. That is the one moment where people data becomes money, salary expense, and salary payable. And finally, financials. Here, almost every module carries the bolt: payables, receivables, fixed assets, cash management, expenses. These are what we call the subledgers, detailed books that know every supplier, every customer, every asset by name. Now, here is the law of the land: every module that creates accounting must pass through one single gate called Subledger Accounting or SLA, and only balanced, summarized journal entries reach the general ledger. One book, many feeders. The GL never learns a supplier's name or an employee's salary. Remember this golden rule: detail lives in the subledger. The GL keeps only the summary. Now let's zoom into one district, payables, and follow one single invoice. This is a normal paper supplier invoice, the kind you see on your desk every single day. In Oracle Fusion, every invoice is stored in three layers: header, lines, and distributions. Watch how each part of the paper finds its place. First, the supplier name goes to the header. And notice, you never type the name. You select it from the supplier master, so the spelling, the tax registration, the bank details are always consistent. Invoice number into the header. Fusion blocks duplicates. The same supplier can never have two invoices with the same number. That alone prevents so many double payments. Invoice date. This drives the accounting period and together with the terms, the due date. Total amount and currency. Later, Fusion will check that the lines add up to exactly this amount. If not, the invoice simply cannot be validated. Payment terms. Net 30 from the 5th of July means Fusion automatically schedules payment for the 4th of August. And the PO reference. Fusion matches this invoice to the purchase order. Quantity and price are compared against what was actually ordered. This is the famous two-way and three-way matching. Now the body. Line 1, cement. What was bought, how much, at what rate. Line 2, freight, kept as its own separate line so it can hit a different expense account than the material. And wait, look carefully. The user never types this. The tax engine calculates it automatically from the tax setup. If the paper shows a different tax amount, that's a red flag. In India, imagine the same logic with GST. Third layer, distributions. This is where each line hits the chart of accounts: company, branch, department, account. Material goes to one account, freight to another, VAT to a balance sheet account. And now what's the best part? The credit side appears by itself. Trade payables 1207.5. Nobody types it. Subledger accounting creates the liability automatically so the entry always balances. Done. One header, three lines, four distributions, debit equals credit. Now let's see what travels to the general ledger. Now think of the subledgers as power stations sitting on top. All the day to day detail lives up there. Only accounting energy, balanced debit credit journals, flows down the wires into the general ledger. AP fires first. Create accounting pushes our invoice through SLA. And what travels? Only the journal, debit expenses and VAT, credit trade payables. The supplier's name stays back in AP. AR sends its sales journal, debit receivables, credit revenue, and output tax. Customer names and receipts stay in AR. Fixed assets sends the monthly depreciation. The entire asset register, cost, life, location, stays in FA. And payroll sends its costing, debit salaries, credit salaries payable. Employee names and payslips never enter the GL, only summarized amounts. And that is exactly why the GL is safe to share widely. This is the golden rule again: detail in the subledger, summary in the GL. And every journal line is stored as a full code combination. Finally, GL produces the one report that proves everything: the trial balance. Every account with its net debit or credit for the month. And look, debits equal credits. The ledger balances. Now, here is the point of this entire video. Look at trade payables in the trial balance. In the GL, at this code combination 733-000-000-211-010, there is only one number, one balance, no names. But watch what happens when I click on it. A drill down opens, and the GL balance is justified supplier by supplier. Opening balance plus this month's journal equals the closing GL balance, and the subledger proves it name by name with aging buckets. This is the relationship. GL holds the balance at code combination level. The supplier wise report can only be generated at the subledger level. Let's see that report in full. This is the Supplier Aging Report, the report your auditor was asking about at the start of this video. Only the AP subledger can produce it. The report groups every supplier's unpaid invoices into age buckets, measured from the due date, not the invoice date. Current 0 to 30, 31 to 60, 61 to 90, and over 90 days. Here it is. Before our invoice, three suppliers already outstanding. Always read this report right to left. The over 90 column is your chase list. Alfarsi 2300, Marina 1830. Seriously overdue. Total outstanding 32,130. And notice that is exactly the GL balance of trade payables before our invoice. Now, our invoice gets posted in AP. And here is the beauty: nobody edits this report, it simply reads the AP tables. Watch, a brand new supplier row appears by itself. Blue Peak Trading lands in the current bucket, invoice dated 5th July, net 30, due 4th August, not yet due. And the total moves from 32,130 to 33,337 and a half, a jump of exactly 1,207 and a half. The same journal that hit the GL. I can flip between before and after with these arrows. Before the invoice, after the invoice. Same report, 2 points in time. And this brings us to the tie out rule, the rule every month end reconciliation is built on. The subledger aging total must equal the GL balance at that code combination. If they don't match, something is posted directly in GL, or accounting is not created, and that's your reconciliation homework. So let's lock this in. 1. Documents are entered in subledgers with full detail. 2. Subledger accounting converts them into balance journals. 3. Only summaries reach the general ledger at code combination level. And 4. Whenever you need the who and the how old, supplier wise, customer wise, asset wise, you go back to the subledger. The next time someone asks you the difference between SL and GL, just say the GL knows how much, the subledger knows who. If this made the concept click for you, do like this video and share it with one accountant friend who is moving into ERP. Thank you and happy learning.